the Bitcoin price, as well as broader crypto market explode as the Trump White House announces a walkback on some of the reciprocal tariffs.
Yes, there's a lot to unpack here, David. So the tariff exemptions that the White House had repeatedly vowed would not be coming, of course, showed up this weekend. A handful of consumer goods, mostly technology, as you guys said, and as you can see on your screen here, all now exempt from the 125% so-called reciprocal tariff on imports from China. They are, though, still subject to the 20% tariff imposed over fentanyl concerns.
Can Bitcoin sustain this breakout? And why are certain altcoins crashing hard? Watch today's whole video for an edge investing in crypto. And here's really where the confusion stems. And by the way, markets rallied in spite of this. But exemptions were announced on Friday when the markets were closed, except for Bitcoin. And then Sunday, Donald Trump tweeted this or posted this on Truth Social. Nobody is getting off the hook. There was no tariff exemption announced on Friday. And this is wild because the exemptions specifically came from whitehouse.gov and had the word exemptions, tariff exemptions in them. So me as a Bitcoin and crypto investor, this tells me two things about what we should expect for markets in the short term, meaning the next 1 to 3 months. Number one, the Donald Trump White House is willing to walk back or put a pause or temporarily halt these market suppressing tariffs if they sense too much fear or if market goes down too much.
They were getting yippy, they were getting a little bit yippy, a little bit afraid.
So this is good for crypto investors because despite the tough talk, they're telling us if markets get too yippy, the White House is paying attention. But number two, what this tells me, which isn't so much of a feel-good moment, is to prepare for further confusion on policy that affects markets deeply. There are some whales. There is some huge money buying the dips right now for Bitcoin, for Ethereum, and betting long-term. But much of the big money doesn't feel comfortable entering the stock market, entering the crypto market, if Donald Trump is just going to tweet again in 2 weeks that tariffs are back on and it's worse. Morgan Stanley's Michael Wilson explained the confusion here perfectly, and he also explains how the Trump tariffs were not the start of the quote-unquote bear market.
Are you concerned or are you, I can't even say those words together, cautiously optimistic or optimistically cautious?
Well, good morning. I think what we're trying to do is navigate what's a bear market. We're in a bear market. I think it started a lot earlier than people are suggesting.
Before the tariffs.
Oh yeah, I think it started last summer in a lot of areas. We navigated a risk of a recession. The Fed did a good job of cutting rates, and we had a big rally into year end, but then we just got overcooked. And the fundamentals have been deteriorating for quite a while. So our main message to clients right now is, first of all, we're not focused on 12-month targets. We're focused on how are we going to navigate the next 3 to 6 months. How do we take advantage of that? I think this correction is very well advanced, both in price and time. And I think that's the most important thing to observe, which is we've been correcting in many areas for almost a year. Okay, and that's important as a technician and somebody trying to navigate the markets. Markets are ahead of the fundamentals. They're always ahead of the fundamentals by 6 to 12 months. And that's what we're trying to figure out. We don't want to get too bearish at the lows. So last Monday was a clear capitulation day, right? That was the moment of recognition that, hey, we may be going over the edge here on a recession. And we priced a lot, right? 4,900, 4,850 was kind of a level that we've been kind of searching for. We found that level. We've had a 1,000-point rally, as you mentioned, in 2 days, okay? So now we're stuck in a range. Now the markets are going to do what they always do. They're going to be volatile until we have clarity on how deep this growth slowdown is going to be.
So don't be fooled that this was the very beginning of the bear market. But also don't expect that we're out of the woods yet. There's uncertainty, and investors feel this.
Well, first of all, we're navigating what I think is going to be a very tricky trading environment, probably for the next 2 to 3 months at a minimum, because for all the reasons you've been talking about and everybody's talking about, we don't really have an idea yet. Okay, so tail risk on recession has gone up. We're at a 40% chance, maybe higher, who knows? And until there's clarity on that aspect, which, by the way, is not just a function of tariffs. Tariffs, to me, is kind of the final blow to an economy that was already weakening for a period of time. And we can talk about those things. So the market now has to navigate this. And we also have a Fed that's on hold. Another thing that I think is different than what was going on last fall, where they were being very generous with stimulus. So we're just sort of trapped in.
They're on hold because of the tariffs?
That's what they're telling us, right? They're telling us that they are still worried about inflation, mainly because of the tariff risk.
We had good numbers last week on
That's
inflation.
Right. And so we'll see, but they're going to be slow on the draw. And that's a very unusual position for equity investors to be in. Equity investors are used to being sort of, benefits bailed out, so to speak, from the Fed or from fiscal stimulus. And right now, both of those are on hold.
Now, the silver lining with Bitcoin, at least narrative-wise, is always, if governments around the world are acting volatile, if there's uncertainty, and even potentially during a trade war, Bitcoin may be seen as that hedge, maybe a flight to safety from fiat currencies around the world. At least narrative-wise, Bitcoin always has that going for it. We'll see how this plays out. And looking at altcoins, breaking news as of yesterday, Mantra OM token crashes 80% in an hour. Just as a reminder, Mantra is tokenizing RWAs. They're aiming to be a layer 1 blockchain for RWAs, obviously backed by notable companies. And the token price got destroyed yesterday, and people needed answers. Well, Mantra's CEO blames the 90% OM token crash on forced exchange liquidations. The price of Mantra OM plunged over 90% on April 13th, falling from around $6.30 to below 50 cents within hours. Again, they're blaming this on the team, as saying this is due to forced liquidations triggered by centralized exchanges during low liquidity hours on Sunday evening. They also go on record saying, the CEO saying, that the sell-off was not due to any token sales by the Mantra team or its investors, noting that OM tokens remain locked according to the project's vesting schedule. Obviously, this is horrible for anybody that had a large position in OM. They seem to be recovering, although I'm keeping tabs on this. And on one hand, things like this are healthy in a sense that during bearish market periods, newer coins that haven't survived bear markets, unlike Ripple and Cardano and Solana, they've survived many bear markets. They're more liquid. These newer coins, the leverage gets wiped out, which is healthy to clear leverage in market. I really liked the CEO, JP, going on Crypto Banter today and explaining the situation.
So this was very early, effectively in the middle of the night. There was massive forced liquidations on centralized exchanges where investors or groups of investors had OM leverage positions that utilized OM as collateral, and the positions were closed out and tokens were sold by exchanges, from what we can understand, which caused this precipitous cascade of selling and downward price spiral. So I was woken up to this. Yeah.
Okay. Yeah. So we can just look at the facts here. So when you say that that exchanges had massive forced liquidations, are you insinuating, or are you implying that certain investors of yours used OM as collateral for other positions, and when the other positions got to liquidation, the OM had to be liquidated?
I mean, we don't have a full transparency report of what happened on the exchanges yet, because obviously they're not going to be sharing that with us, and we're only hearing through what our investors are telling us what happened. But basically, investors had leverage positions. They used OM as collateral. This collateral was, taken over and sold, and that caused these, sharp liquidations on leverage positions in OM, but potentially in other tokens as well.
This is an ongoing story. And by the way, my brother and I will be speaking at Bitcoin Conference 2025 in Vegas. Ticket prices are about to increase, so use code ALTCOINDAILY for 10% off. Come hang with us, let's have a drink, let's talk to other notable speakers. It's going to be awesome. Link down below. Like always, see you tomorrow.